Hey guys, welcome to the Bitcoin Fortress podcast, helping you increase your financial freedom. This is episode 156, brought to you here on March 2nd, 2025. This podcast is for entertainment only and is not investing advice. Do your own homework. Okay, we are at block 886030, Moscow time 1065, and fees are 4, 6, and 7. We'll start with the market news update outlook, get into the weekly top Bitcoin news, including some breaking news. And then we will check out this week's featured post on the Bitcoin Fortress Substack, do our weekly top boosts on Fountain, and wrap it up. So with that, we'll jump right in. The benchmark S&P 500 index on Friday fell about 1% for the week, underscoring a tough February overall for markets. The enthusiasm that swept Wall Street after Donald Trump's election victory last year and inauguration last month has waned in the face of uncertainties caused by the US president's tariff moves, along with data that has pointed to sticky inflation and a slowdown in the economy. One of the biggest events this week was chip giant NVIDIA's quarterly results. The company's blockbuster earnings over the last 2 years have turned it into the world's second biggest firm by market capitalization. Despite strong fiscal fourth quarter results, the stock fell more than 8% in the wake of massive expectations. Tariff drama continued to dominate headlines this week as well. Trump confirmed that previously delayed 25% tariffs on imports from Canada and Mexico would indeed go into effect in March, along with an additional 10% tariff on imports from China. Trump also met with Ukraine President Volodymyr Zelensky at the White House to discuss efforts to bring an end to the Russia-Ukraine war and sign a minerals deal. However, the meeting turned heated, and Zelensky was seen leaving the White House with no deal signed. The January core personal consumption expenditures price index reading was another highlight of the week. The metric, widely seen as the Federal Reserve's preferred inflation gauge, came in line with consensus estimates. For the week, the S&P 500 slipped 1%, while the tech-heavy Nasdaq Composite slumped 3.5%. The blue chip Dow bucked the trend, rising 1%. Looking ahead, investors will have their hands full next week with troves of data, with the highlight being Friday's jobs report for February. Major names reporting quarterly earnings next week include CrowdStrike, Broadcom, Target, Costco Wholesale, and Kroger. Purchasing managers data for February will be released on Monday from S&P Global and the Institute for Supply Management, while factory and durable goods order statistics for January will be released on Wednesday. All right, jumping into the Bitcoin news. First, we have Good Morning Bitcoin from Saturday, March 1st. This is from No BS Bitcoin. Bitcoin miners have been hit hard by low fees and tumbling prices. Bitcoin's mining profitability fell below $50 per petahash per second due to market turbulence reaching its lowest point since mid-November. Transaction fees totaled 163 Bitcoin by the end of February, accounting for just 1.33% of block rewards, reports the Miner Mag. Mozilla deletes the promise to never sell personal data. Mozilla, the maker of the Firefox browser, deleted a promise to never sell users' personal data, prompting user concerns. The company is now trying to reassure users that its privacy approach remains unchanged. European states race to enable encryption backdoors. European policymakers continue to advance various proposals and regulations that could severely compromise the privacy and security of European citizens. A new French law amendment would require encrypted services to provide law enforcement access within 72 hours, with noncompliance fines of 1.5 billion euro for individuals and 2% of global turnover for companies. Meanwhile, in Sweden, the government is pushing for encrypted messaging apps like Signal to implement similar E2EE backdoors, which could become law as soon as March 2026. Member countries of the European Union are still attempting to discover a viable way to implement chat control. The EU working group will continue to negotiate the issue in March. And the state keeps creeping into our private lives. I don't like storing anything in cloud. I think if you want to you back up your phone, do it on your home computer or set up your own personal server, like a Start9 or something like that, and access that remotely to back up your files because the trend is not good. Even Apple caved in, I think, to the UK's demands, and so they're allowing a backdoor into their cloud uh, files. So not good. US SEC drops high-profile crypto cases in a notable regulatory pivot. The agency closed its investigations into Coinbase, Gemini, Uniswap, Robinhood, MetaMask, OpenSea, and Richard Hart. Additionally, the agency issued a statement on meme coins clarifying that most of them are not considered securities. The offer and sale of meme coins does not involve an investment in an enterprise, nor is it undertaken with a reasonable expectation of profits. That's true, to be derived from the entrepreneurial or managerial efforts of others, said the agency, adding that fraudulent conduct related to the offer and sale of meme coins may still be subject to enforcement action. Nigeria introduces digital asset transaction tax. Nigerian officials plan to amend digital asset regulations to tax transactions and boost state revenues. The Nigerian SEC is reviewing a framework to tax transactions on regulated exchanges to extract more value from the growing digital asset sector. Texas moves toward a strategic Bitcoin reserve. The Texas Senate Business and Commerce Committee unanimously approved the Strategic Bitcoin Reserve Bill, SB 21, with a 9-0 vote. The bill now advances to the state Senate for further discussion. Tropic Square, Tropic O1 open source secure element samples now available. Tropic Square, a startup backed by Satoshi Labs, the company behind Trezor signing devices, has unveiled its pre-production samples ahead of the mass production and market launch of their open-source Tropic O1 secure element designed for use in Bitcoin hardware. MetaMask confirms it will add Bitcoin native support this year. The popular crypto wallet said that it plans to launch full Bitcoin support in the third quarter of this year. That's interesting. It's a little late to the game there. Bitcoin miner TeraWulf sees 102% year-over-year revenue growth. The firm's full-year revenue rose 102% to $140.1 million from $69.2 million in 2023, driven by increased Bitcoin production and higher prices. As of December 31st, the company held 1,801 Bitcoin. Blockstream opens applications for Lugano Research Hub grants. The grants are open for builders seeking to develop on Lightning or Liquid and come with a 10,000 CHF sponsorship for founders and small startup teams to set up and live in Lugano. Baltic Honey Badger 2025 tickets are now on sale. The most OG Bitcoin conference is set to take place on August 9th through 10th, 2025. In Riga, Latvia. The event will occur right after the Bitcoin Plus Plus Privacy Edition scheduled for August 7th and 8th. And there's links in the article if you want to get some tickets. Next up, Hodler's Digest from Cointelegraph for the week February 23rd to March 1st. Try to skip over the shitcoinery, unless it's funny. Let's see. The United States Securities and Exchange Commission has dismissed its lawsuit with crypto exchange Coinbase on February 27th, filing show, ending the case permanently. The SEC agreed to voluntarily dismiss all litigation tied to Coinbase and Coinbase Global with prejudice, which included withdrawing from its initial June 2023 lawsuit and its request for an interlocutory appeal with the U.S. Court of Appeals, a February 27th court filing shows. It comes after the two parties announced an agreement to end the legal dispute on February 21st. This is a little bit old news now, but Bitcoin has fallen under $80,000 for the first time since November amid mounting macroeconomic uncertainty over US President Donald Trump's proposed tariffs. On February 27th, Bitcoin plummeted to $79,752, according to TradingView data. The 2.65% price decline over the past hour led to $100 million in long positions liquidated per CoinGlass data. People keep getting wrecked, short and long. Bitcoin last traded at this level on November 11th, just days after Trump was elected US president, amid optimism that his pro crypto policies would lead a Bitcoin rally in 2025. Over the past couple days, most crypto traders eyed 82,000 as a potential bottom for Bitcoin, but many are now bracing for a move towards 70,000. U.S. judge tosses SEC fraud suit against Hex founder Richard Hart. A district court judge has dismissed the U.S. security regulator's lawsuit accusing Hex founder Richard Hart of raising over $1 billion through unregistered crypto offerings and defrauding investors of $12.1 million. Hart, whose real name is Richard Schuler, was also accused of spending those allegedly stolen funds on luxury items, including the world's largest black diamond. However, Judge Carol Bagley Iman said those alleged deceptive acts couldn't be decided on as the U.S. Securities and Exchange Commission failed to establish that the U.S. had jurisdiction over Hart's crypto activities, which he said were global in scope and not specifically targeted at U.S. investors. Well, he's definitely a shitcoiner. We'll see what happens to him, but it's interesting how the SEC is just dropping everything. SEC again delays Ether ETF options on CBOE. Don't care. The U.S. Federal Bureau of Investigation has urged crypto node operators, exchanges, and the private sector to block transactions from addresses used to launder funds from the $1.4 billion Bybit hack. The FBI confirmed the results of an earlier industry investigation stating that North Korea was responsible for the hack, which the U.S. law enforcement agency dubbed Trader in a February 26th public service announcement. The FBI noted in an April 2022 statement that Trader is a commonly referred to in the industry as the Lazarus Group, uh, Apt 38, Blue Noroff, and Stardust Cholima. Prediction of the week. U.S. President Donald Trump's first month in office has been highly volatile for risk assets, but his administration will likely be a net positive for Bitcoin in the long run, according to Standard Chartered. In a February 27th interview with CNBC, Standard Chartered's head of digital assets research, Jeffrey Kendrick, said he expects Bitcoin's price to reach $200,000 this year before surging to $500,000 prior to the conclusion of President Trump's second term. He cited growing institutional adoption and the potential for clearer regulations as positive catalysts. This is interesting. Since reaching all-time highs on January 20th, Bitcoin's price has been suppressed by hedge funds exploiting a low-risk yield trade involving spot exchange-traded funds and CME futures, signaling once again that institutional adoption of crypto assets isn't a one-way street. This is the general takeaway of analyst Kyle Chasse, who dissected the latest Bitcoin price crash in a thread on the X social media platform. For months, hedge funds were exploiting a low-risk yield trade using Bitcoin spot ETFs and CME futures, said Chasse. Now this cash and carry trade is imploding, he said. Hmm. All right, moving along. This is breaking news. Uh, President Trump confirms strategic crypto reserve with Bitcoin and altcoins. President Trump directed his presidential working group on crypto to move forward with the strategic crypto reserve on Truth Social, providing the first glimpse of what it may contain. The president first named XRP, Solana, and ADA to be included in the reserve, later adding that Bitcoin and Ethereum will be at the heart of the reserve along with other valuable cryptocurrencies. A U.S. crypto reserve will elevate this critical industry after years of corrupt attacks by the Biden administration. I will make sure the U.S. is the crypto capital of the world. We are making America great again, said the president. The move is consistent with the administration's first week executive order on strengthening American leadership in digital financial technology, which set the direction for the crypto friendly White House digital asset policy. More details about the reserve are likely to emerge during the first ever crypto summit at the White House, which will take place on Friday, March 7th. And we'll read a little bit about that next. This was from CoinDesk. U.S. President Donald Trump will host a crypto summit on March 7th, the White House announced. White House crypto and AI czar David Sachs and Bo Hines, the executive director of a working group on digital assets, will run the meeting, though Trump will speak at the summit, a late Friday press release said. Attendees will include prominent founders, CEOs, and investors from the crypto industry, as well as members of the president's working group on digital assets, the release said. The summit will come just about a month after Sachs, alongside congressional leaders, gave his first public remarks as as Trump's crypto czar. We want to keep that innovation onshore in the US, he said at the February 4th press conference. Financial assets are destined to become digital, just like every analog industry has become digital. And we want that value creation to happen in the United States rather than giving it away to other countries. The White House did not name the summit's other attendees. Friday's announcement ends a busy week for the crypto industry. Earlier in the day, a federal judge signed off on the Securities Exchange Commission's motion to withdraw its case against Coinbase. Joe Lubin, the CEO of Ethereum incubator Consensus, and Cameron Winklevoss, the co-founder of exchange Gemini, both said earlier in the week that the SEC informed their respective companies that it would shutter its investigations into those firms. The SEC also filed to pause its case against the Tron Foundation and founder Justin Sun. After the previous administration unfairly prosecuted the digital asset space, President Trump's policy vision represents a new era for digital financial technology, the press release said. The administration is committed to providing a clear regulatory framework, enabling innovation, and protecting economic liberty. So, big changes there. Next up, from Bitcoin.com news. This was posted yesterday. 30,702 Bitcoin in 60 days. Strategy, insane Bitcoin gains signal bigger move ahead. Michael Saylor, executive chairman of software intelligence firm MicroStrategy, has provided an update on the company's Bitcoin holdings and financial performance. MicroStrategy recently rebranded as Strategy to emphasize its commitment to Bitcoin and artificial intelligence. On March 1st, Saylor shared on social media platform X. Last year, Strategy delivered a Bitcoin dollar gain of $13.1 billion, 140,538 Bitcoin. In the first 2 months of 2025, we have achieved a Bitcoin dollar gain of $2.6 billion, or 30,702 Bitcoin. This underscores the company's continued commitment to its Bitcoin accumulation strategy, which has played a key role in its financial growth. The firm has built one of the largest institutional Bitcoin holdings, currently standing at 499,096 Bitcoin. MicroStrategy reported a Bitcoin yield of 6.9% year to date and an impressive 74.3% Bitcoin yield for 2024. The company's significant exposure to Bitcoin has contributed to its stock's remarkable performance, with a 165% one-year return, outperforming major technology stocks such as Nvidia, 61%, Tesla, 45%, and Meta, 38%. Beyond financial gains, Saylor has also been engaging with regulators. This week, he presented a digital asset framework to the U.S. Securities and Exchange Commission and lawmakers, aiming to provide guidance on Bitcoin adoption, regulatory clarity, and institutional investment strategies. His discussions with policymakers signal an effort to shape the evolving regulatory landscape for cryptocurrencies while reinforcing Bitcoin's role as a legitimate asset class. As the firm moves further into 2025, its aggressive Bitcoin acquisition strategy, combined with Saylor's regulatory efforts, positions strategy as a key player in the digital asset sector. Next up from Crypto Potato. This was posted, looks like Friday. Arthur Hayes predicts more declines for Bitcoin. Hold on to your butts. Bitcoin has fallen below the $80,000 mark for the first time in almost 4 months, and market analysts believe the crypto asset could witness more bloodshed over the weekend. Such were the words of Arthur Hayes, the co-founder and former CEO of the crypto exchange and derivative trading platform BitMEX, in an X post. Hayes believes Bitcoin could experience more significant declines below $80,000 before Monday. According to Hayes, Bitcoin is recording more declines in this current wave. The crypto entrepreneur revealed that he was tempted to add more risk to his holdings on Friday morning. However, upon further analysis of Bitcoin's price action, he figured that the cryptocurrency could see one more violent wave below 80,000. Hayes said that after the violent wave, which would most likely occur over the weekend, there would be crickets for a while, meaning that Bitcoin would consolidate and trade range bound for some time. Hold on to your butts, Hayes said, urging market participants to hang on as this ride is about to get rougher. In the last 24 hours, Bitcoin has fallen by roughly 10%. Data from CoinMarketCap shows that the asset has a 24-hour high of $87,000 and a low of $78,344. The digital currency was trading at $79,800 at the time of writing, with frequent price changes within seconds. Going by Hayes' prediction, Bitcoin could plummet to 70,000 or even further within the next 72 hours. Bitcoin's current condition aligns with the prediction Hayes made a month ago. Crypto Potato reported that BitMEX co-founder forecasted a turbulent path that would see the asset tumble to between 70 and 75,000. He said a mini financial crisis would trigger the turbulence. At the time, Bitcoin was trading at around 98,000. However, Hayes has maintained a bullish stance on Bitcoin's long-term outlook, stating that the Federal Reserve's resumption of money printing would push the cryptocurrency to $250,000 by the end of the year. Meanwhile, Bitcoin's price actions have wiped out almost all gains since the U.S. presidential elections. CoinGlass data shows that more than 227,000 traders have been liquidated in the last 24 hours, with the total liquidation surging above $932 million. Well, folks, it's a wild ride. Stay humble, stack sats, put it in cold storage, forget about it, and don't trade because levered long, levered short will get wrecked. Next is from Bitcoin Magazine. This article was posted February 25th. Voltage aims to bring Bitcoin's Lightning Network to every business in the world. In 2012, soon after Graham Krizek discovered Bitcoin and subsequently began contributing to Bitcoin Core and building his own applications on Bitcoin, he noticed an issue that was hindering Bitcoin builders. The problem that I saw was that everyone was building everything from scratch over and over and over again, Krizek told Bitcoin Magazine. There was no cloud environment where you could just spin up Bitcoin infrastructure and be able to start developing against it. At the time, Krizek didn't feel compelled to act on this issue, though. He was still primarily focused on his career as a software engineer outside of the Bitcoin space, working for various startups as well as companies as large as Salesforce, while contributing to Bitcoin in his free time. But something shifted within him when he learned about the Lightning Network. He saw its potential and knew that it would have to be made easier to use if it were to be widely adopted. When I found Lightning, I said to myself, okay, this is the next phase of Bitcoin adoption, the thing that's going to really drive it to the next level, said Krizek. Then I saw the same pattern happening as I did with Bitcoin. Everyone kept starting from scratch while building, but the problems were more intense because Lightning is that much more complicated, he added. It was like, we need a cloud provider where you can just click a button and have a Lightning node running and maintained for you. It can just be there so we can develop applications and build the projects we want to build much easier, much faster. And so Krizek got to work creating such a product. He shared the initial iteration of it with friends and acquaintances, many of whom began using it so much that the project demanded more of his attention. The usage grew to a point where I was like, man, I either need to shut this down because I can't maintain it anymore, or I need to turn this into a business and do it for real, said Krizik. He decided on the latter, and by late 2020, he'd founded Voltage. Voltage abstracts away the complexities of using Lightning by allowing users to deploy a Lightning node and spin up a channel in just a few clicks. While Voltage hosts your node in its cloud, its public key, peers, channels, balance, and transactions all remain private, as all of the traffic routed through the node is transferred via Tor. While your node is running in the Voltage cloud, which is supported by the Google Cloud and several other cloud service providers, Voltage also helps users manage liquidity and offers other forms of customer support. Essentially, Voltage abstracts away the difficulties of engaging with Lightning while supporting its users in the process. And it does this in efforts to help institutions more readily adopt Lightning. Krizik also mentioned they have new products and capabilities to help even traditional finance companies with the integration. The mission of Voltage is to make Bitcoin and the Lightning Network accessible to every business on the planet, said Krizik. Lightning is fantastic. It's got a lot of really amazing capabilities, but it can be really hard to wrap your head around it and especially to incorporate it for business operations, especially for businesses that maybe aren't in the Bitcoin or crypto space, he added. We make it easy to use and plug in. In the past year, notable companies such as major crypto exchange Coinbase and Latin America's largest fintech bank, Nubank, have incorporated Lightning into their operations. Krizik sees this trend of crypto exchanges, neobanks, and other financial service platforms onboarding to Lightning continuing in the year ahead. Finance companies are definitely going to be the biggest movers because if you can take the value of sub-second settlement with zero fees and apply that to a big payment processor that does global payments, it's an incredible value add for their business, said Krizik. What is more, Krizik sees companies outside of the Bitcoin, crypto, and finance space also beginning to utilize Lightning in 2025, in part because companies like Voltage are making it easier to do so. 2025 will be a big year for starting to branch out of our niche market, said Krizik. The technology still has been a little rough around the edges for a big company like Walmart to be like, hey, we're going to plug this in now. Even with Voltage, we haven't been perfect the entire time with making Lightning super easy to use, he added. I think we've made huge strides in the last year, though, and we have a lot more coming out. Another major hurdle for companies looking to adopt Lightning is the risk that comes with managing Bitcoin's volatility. But that risk doesn't exist if companies send Tether over Lightning instead of Bitcoin, which they will be able to do soon. Krizik is optimistic about USDT coming to Lightning as he believes it will spur growth on the network. I think that we're going to have a lot of products and solutions around it, said Krizik. It's not even just me being personally excited about it. A lot of our customer base is very excited about it. They're asking for it directly from us because stablecoins are pretty much the biggest use case in crypto today, he added. When you couple stablecoins with sub-second settlement fees and very low fees, that's a huge unlock. With fees on Tron getting more expensive, people are looking for an alternative. Tron has been the leading blockchain in stablecoin transactions because of how low fees on the network have been historically. As far as USDT running over Lightning potentially presenting a security risk to Bitcoin, as I think it does, Krizik doesn't seem concerned. It doesn't worry me at all, said Krizik. I think that we've advanced since the block size war in terms of takeovers, as I don't think it's as easy for a large institution to coerce the Bitcoin ecosystem like some did during the block size wars, he added, referring to Tether potentially gaining outsized influence over Bitcoin. And it's even better to integrate something like Tether on Lightning because it's a peer-to-peer network. It's not public consensus, so you have much more ability to say, hey, if you don't want to participate in USDT transfers, just don't do it. U.S. crypto czar David Sachs is an investor in Voltage via his venture capital firm Craft Ventures. This would indicate that he has some understanding of the Lightning Network and the role of Bitcoin as a medium of exchange. So does this mean that the US is on the verge of embracing Bitcoin as such? According to Krizik, not exactly. Everyone is screaming at the government right now for a strategic Bitcoin reserve, which treats Bitcoin as a store of value, explains Krizik. Over time, we will definitely hear more and more about Bitcoin as a means of payment. We just need to get through the strategic reserve conversation first and then say, okay, what else can we do with this? He added. The fact that the government is painting Bitcoin in any sort of positive light at all, though, is exciting to Krizik. Since 2012, when he first entered the Bitcoin space, the government has either dismissed Bitcoin or been antagonistic towards it. When I started in Bitcoin, it was completely ignored, and the last 4 years were very bad for companies like us, said Krizik. With this new administration, we've definitely seen the tone shift. We're still working through certain things, but we're definitely turning a corner and headed in the right direction, he added. I'm really excited to see where that can go over the coming year. I think it'll be a positive one. All right. And then finally, wanted to highlight this week's featured post on Bitcoin Fortress Substack. The post is entitled Spring Cleaning Your Financial Life with Bitcoin. Kind of inspired by the turn in the weather recently. So, kind of focused on that. Also, if you're interested, I have a kind of a cool backlog of articles coming up, and I will mention those briefly. Let's see. Next up is Bitcoin and Grunge, followed by WTF happened in 1971, the fiat standard societal shifts, and Bitcoin's answer. That will be followed up by the top 10 ways to accumulate more Bitcoin. And then after that, it's capital controls, followed by Bitcoin's intrinsic value. So if you want to read that, it's free. Just sign up. Link to the article is in the show notes. Want to end with the weekly top boost on Fountain once again at God's Death with 236 sats. Thank you, sir. And with that, I will thank you all for listening to the podcast. If you enjoyed the show, please like and leave a comment. And also, don't forget to subscribe on your favorite podcast app so you don't miss an episode. You can follow my Substack at bitcoinfortress.substack.com. And you can follow me. I'm on Nostr. My NPub is in the show notes. And with that, I will talk to y'all next week. Bye bye.